What's up, guys? Welcome back to the channel where transparency meets trading. If you're new here, my name is Tiana, and my goal is to share my true and transparent Forex/futures trading journey. And this week, we are doing a recap video of all of the trades that I took last week. Again, for those of you that are new here, I know that we have a lot of new subscribers, so welcome, welcome, welcome. But as stated, each week I recap the trades that I took the previous week. This is because one, I like to maybe educate and help someone who is struggling to trade or who just wants to learn about trading. Two, for encouragement, because if you see someone going through the process, it encourages you on your own journey. And three, again, just to create a realistic perspective of what trading is week in and week out. It's not always all of the glitz and glamour and the Lambos and the money and the payouts that you see that is portrayed in the media. Sometimes it's not pretty. Sometimes each week is not cute. And no matter what that is, for me personally, I like to be transparent about it and show you guys exactly what I'm seeing, exactly what I'm going through. But without further ado, we are going to get into the analysis and recap of the trades that I took last week. Cool. That was a mouthful, but let's get right into it. All right, so for those of you who have seen my trading plan video, you know that before I enter a trade, I'm asking myself three things. What is my bias? What is my entry? And where am I getting out of the market? Those are the three questions that I need to be able to answer before getting into a trade. So number one, we're going to talk about my bias. So starting out, we are on the weekly time frame, and normally I start out on the daily, but the weekly had a whole lot of key levels that I wanted to note to you guys. So as you can see, price has been consolidating back and forth between these two zones. It tested this as resistance, broke through, came up, tested this zone as resistance, came down, tested as support, hit this as resistance, and so on and so forth. So you can clearly see that price is ranging in between these two key levels. That is something important to know. I also have a daily red trend line going upwards from these points as well. So this is more so like an overall view for like a monthly or things like that. But it's just something that is very, very important to know. It's important that you see the overall picture before you zoom in into the minute things that are happening, you know, on the 30-minute, 1 hour basis. So let's go down to this daily time frame. And again, if this is your first time watching my videos, please do not be alarmed by all of these colored thick trend lines. I trade based off of structure. And when I am explaining these trades to you guys, I want you guys to be able to see exactly the structure that I'm looking at. It's one thing for me to tell you guys, but it's another thing for you to actually see it and comprehend it on your own. So because of that, I like to color code everything. You can see that I have my 4 hour. It is going to be color coded in purple, the zones, trend lines, etc. My 1 hour is going to be color coded in blue, and my 30-minute is going to be color coded in orange. Now that we got that crap out of the way, let's talk about it. So you can see right here, I have this 4 hour going on a downtrend. So I have it labeled out in my structure box that the 4 hours on the downtrend. I also have labeled right here by this note that the 4 hour has not hit TP1 yet. And what this means is I use fibs to trade as well. So price pulled back to the 78.6% fib level, but it has not yet pushed to either one of my TPs, which is the -27 and -61.8%. This is just something that I like to note for myself to get an overall picture of the market. Also, as you can see, we have this 4 hour zone that price previously tested as resistance, broke through, and is now testing as support. So those are two very, very important things to note. Let's go down to this 1 hour, which is labeled in blue. So as you can see, previous 1 hour structure was going on an uptrend. Price came down, broke this 1 hour low right here. We can annotate this. Break of 1 hour structure. We are going to put that in blue. Oh, that's ugly. Put that in blue. So as you can see, because I have this break of this 1 hour structure, I am now assuming that this 1 hour is in a downtrend. So I have that labeled right here in the box. Next, we're going to go down to this 30-minute time frame. And as you can see, in this box, I have 30-minute labeled going in an uptrend. And here is why my bias was this way. Previous 30-minute structure, you can see that it was around the negative 61.8% fib level. For me, this is the indication of reversal. So that's number one, why I felt like 30-minute was going in an uptrend. Number two, I have divergence. Divergence is where price is doing one thing on the chart, but on the RSI, it's doing another. So you can see that on the chart, price is trending in a downtrend, but on the RSI, it's trending in an uptrend. So that's divergence, which is an indication of reversal. Number two, price is hitting this 4-hour zone that we just previously talked about. So in my head, I'm expecting price to go up. So this is the reason why I have right here, you can see I have this 30-minute impulse, this correction. And in my head, I was expecting price to continue this continuation and push up somewhere around in this point. And that is the reason why I have in this box 30-minute labeled in an uptrend. So now that we have my bias for the market, we're going to talk about that second question that I told you guys I have to ask myself is, where am I entering into the market? So we're going to talk about the confluences that I had as to why I took the trade right here. So let's go down into this 15-minute. So the first confluence that we have is what I kind of already talked about. I was expecting the 30-minute to go in an uptrend. I did not have a breaker structure, but I had a lot of other confluences giving me reason to support my bias of why I thought 30-minute was going to start in an uptrend. So that's number one. Number two, you can see, let me hide this right here for the time being. We're going to talk about that a little bit later. But price came up, tested this trend line, came up, tested this trend line, tested this trend line, tested this trend line. Once price broke this trend line and came right here, for me, this was an indication of a break and retest of a trend line. So we're gonna put that break represented by that red box, the retest of the trend line represented by that blue box. So this was a second indication for me to get into the trade. Also, the third indication, you can see bright price broke this recent 15-minute structure low and broke above that and came back down to retest. So that was my third reason. So those were the three reasons as to why I entered this trade. Now, of course, the market isn't always going to do what you want it to do. This is why it's very, very important to have an exit strategy and knowing how to manage your risk. So for this trade, I had a 15 pip stop loss. I never do anything less than 15 pips. And I had in mind my take profit was going to be somewhere up here. My first TP was going to be right here. And then my second TP was going to be up here, my third TP, and so on. But obviously, as you can see, the trade didn't exactly go the way that I anticipated. We were in drawdown for a little bit. Price did come back up and shoot up as I had expected it to. But in my trading plan, after price makes strong bullish move like this, one, I'm supposed to start taking profit. And then I also, once price pushes up, I move my stop loss into profit. So I moved my stop loss into profit about here, and then price was just shooting up, but it came back down and it stopped me out right here. Overall, this trade ended up profiting me $13 because it did come back down and hit my stop loss. So, which isn't a bad trade. Your goal for getting in and out of the market should be either to make profit, to break even, or to minimize your loss. It is what it is. That's a trade that I took. That was that. All right, so now we're going to talk about this second trade that I took in a week. And I want you guys to pay attention because, again, my goal is for you to learn from my mistakes and just learn something in general to encourage you on your own journey. So as we talked about earlier, I had this bias in my head that 30-minute was going on an uptrend. Price was going to break this trend line and go upward, and it was going to blow it out the water. I was going to have all these profits. Because in my head, I was so stuck in my own bias and not trading what I see and not what I think. Let me show y'all. You can see right here in this structure box, I have this quote that says trade what you see and not what you think. At this point in time, when I took this trade, I was trading what I thought, not what the market was showing me. So again, I was so stuck on the bias that price was going to increase and go up from here. So I re-entered into a trade at this point. Number one, the reason that I broke my trading plan was because I have a rule where after price breaks a trend line and it already has that first initial impulse, I'm not entering again once price comes back and hits this trend line, because most of the time, if you've missed the move, if you missed the train, the price is just gone, and that's just that. So I already knew in my head that this wasn't a trade that I was supposed to take. But again, I was so stuck in my own head, so stuck in my own way of just trying to have this idea play out in my head. And once obviously price went against me and was not respecting this trend line in my head, I knew like, okay, this is probably not going to play out. Price is not doing what I wanted to do. So I went ahead and exited the trade before it even hit my stop loss. This is also against my trading plan. I don't take or pull trades that are in drawdown. If it's in drawdown and it hits my stop loss, oh well, but I'm not pulling the trade. I have to stick to my bias. But I did anyway. Again, I was in my head and I didn't want to miss out on any money. So as you can see, this is an example of me not going with my trading plan. But the thing that I want you guys to take away from this is I took this trade, when was this? On a Tuesday. My rule is whenever I take a trade or I do something on a day that is not against my trading plan, I am not allowed to trade for the rest of the week. And I know for some people, they may be like, well, you have the chance to make it up. You have the chance to do it for a day. Da, da, da. I'm all about discipline and I'm all about being accountable for myself. So because I broke my trading plan, I'm no longer allowed to trade for the rest of the week. I gotta watch the market move. I gotta watch the market play out and make big moves without me. This is a way that I quote unquote punish myself, and I'm able to learn from my mistakes. So because of that, I did not trade for the rest of the week, but I still do want to show you guys why it's important to trade what you see and not what you think. Because as you can see, even though I thought price was going to go in an uptrend, price broke this low right here. We had a break of 30-minute structure. Price came up, tested this trend line. Let me make it black. You can see that price came up, tested this trend line. It broke and retested this trend line right here and pushed all the way down to TP1. So as you can see later on in the week, if I would have just been patient and just waited to see, what the market has set up, how the market will play out, and like I said, just been patient, this is a great trade that I could have took, and it most likely would have gained back all of the money that I had lost at the beginning of the week. But again, like I said, my rule is if I don't follow my trading plan, your punishment is you can't trade for the rest of the week. And that's just me. So I did miss out on this trade. It was a great setup, but it is what it is. I'm following my plan. I'm following the stuff that I have set for myself because at the end of the day, my goal is to become a better trader. I'm not really too much worried about the money I'm making right now. I'm not really too much worried about the money that I'm missing out on right now. I want to create habits and create the discipline that I need in order to be a better trader. Now, aside from all of this, I do want to list out the things that I learned from this week because I feel like that's important and I want you guys to also learn. So number one, the first thing that I learned from this week is follow your trading plan. Please, please, please follow your trading plan. Like I said in one of my previous videos of when I was discussing my trading plan, if you haven't seen it, please go watch it. But you are creating a system and you cannot analyze the downfalls or the bad things in that system if you're not implementing and following it on a consistent basis. That is why that is so important to follow your trading plan. Number two, the second thing that I learned, know when to trade and stay away from the market. Now, when I was starting my trading journey, I heard a lot of trade gurus or people that already have a lot of skin in the game say this all the time. Every market is not going to be conducive or good for your style of trading. For me, as you can see, I trade based on structure. So when the market is trending, when it's going up, going down, when it's actually making movement, that is when I make the most money. But when price is being extremely choppy like this, you can see how price was consolidating to the side. This is not a good market condition for me quite personally. It's something that I need to be aware of, and something that if I do choose to trade in these conditions, one, I need to lower my size. Two, I need to be extremely careful because I know that this market condition is not conducive to my trading. So that's what I mean when I say know when to trade and stay from the market. Know what the market needs to look like in order for you to be successful, in order for you to be profitable. If the market looks like this, it's okay to be patient. Like I said, if I would have been patient and just waited for the market to give me more confirmation of the direction that it's going, instead of just being so stuck on one idea, once price broke this low right here, I'm like, okay, price is actually going in a downtrend on this 30-minute structure. Now I can look for an entry into the downside, which would have been right here, and I would have made my money and been done for the week. And that leads me into my third point again: trade what you see and not what you think. I have been studying structure for a while now. I think that I personally have it down packed. Now, that does not mean that I am completely perfect. No one, including myself, including the best traders that you see out there, can predict the market. I don't care how much work you put in. I don't care how good you get. These markets are going to do what they want to do. Your job is to analyze them and make trades and decisions based off of the market data that is presented. Don't be so stuck and so headstrong on one idea that you are missing out on all of the other opportunities that the market is actually providing. This could be so detrimental. So this is why I have it written up here on my structure box. Every time I get on these charts, I see trade what you see and not what you think. But as you can see, I'm not perfect. I make mistakes. And last week I was trading what I thought and not what I saw. But now that we have went over these things that I want you guys to take away from this video, as always, I'm going to show you guys the platform in which I place the trade, and you guys can also can see the money that I made and the money that I lost. The reason that I do this is because I know there are a lot of people out here that try and show you guys the trades that they're taking and be like, I made this and that money, but they don't actually show you the money that they made or the money that they lost. That's not very transparent. And like I said, my goal on this channel is to keep it a buck, be completely 100 and transparent with you guys. So down here you can see that this is that first trade that I took where price came back to hit my stop loss, basically break even, a little bit above break even, where I made that $13.19. And then you see the trade right here where I lost because I went against my trading plan. I lost $69.33. This right here, I think I took partials, or I was messing with the buttons, or something had happened, but I ended up losing like $1. And then yeah, but that's that. So that is that trade that I lost right here. Now these two trades up here are trades that I took today, but again, we're going to go over those in my next week's recap video. But something that I do want to point out, if you scroll down and just look at my P&L for the month, you see all the green and you see all the red. This is why risk management is so important. I have large wins, I have small wins, I have small losses, but overall, I'm in the green. Trading is not, you're not going to win every trade, but what's important is that I want you guys to see is you learn from your losses. You notate those losses just like I did today, and you see what you need to improve on and what you need to do better so that overall you can end up on the green side. But that is going to be it for this video. I hope that it helped someone, that you guys took away anything. Please let me know down in the comments some things that you guys learned, or some things that you guys are struggling with, or any questions that you have about the way that I trade. Don't forget to subscribe, and I will see you guys for next week's recap video.